Welcome to the Fear and Greed Weekend Edition, the week that was, a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. It was a week of booming share markets, COVID outbreaks, a surging economy, and some of the weirdest stories of the year. It was a great week for the local market, with the S&P ASX 200 hitting a new intraday and closing high. The oil companies led the charge, thanks to the price of Brent crude pushing above $70 a barrel for the first time since 2018. But they weren't the only companies at the party. Thermal coal prices surged as demand from China, India and Vietnam grew. The iron ore miners, including BHP, Fortescue Metals and Rio Tinto, benefited from a pickup in prices of Australia's biggest export. The financial service groups, led by the banks, had a good week. So too some of the consumer discretionary stocks that benefited from a growing economy. The price of an ounce of gold this week jumped beyond $1,900 an ounce on the back of rising inflation expectations. Gold holds its value, or as economists put it, gold is a store of value. So when inflation rises, so too does gold. The Aussie dollar had a typical week. Trading in the 77 US cent range, it almost hit 78 US cents with the release of strong economic growth figures, but towards the end of the week, the greenback jumped and the Aussie fell back to 76.5 US cents. The other bit of the market news worth a mention were reports that US authorities are considering taking a more active role, shall we say, regulating the $1.5 trillion cryptocurrency market. Authorities are worried that investors will get burnt. Really? In crypto world, it was a relatively sedate week though, with Bitcoin trading around $39,000 a unit. There wasn't much happening in global equity markets, to be perfectly honest. All the action was at home. The debate about inflation and the strength of the economy, as well as vaccination rollouts, are dominating sentiment on Wall Street. European markets were generally stronger, with the German DAX hitting a record high. That was probably the high point. The week started with the Prime Minister Scott Morrison in New Zealand talking about travel bubbles with other Pacific nations and standing side by side with New Zealand PM Jacinda Ardern, warning of the perils of China. By the end of the week, Mr Morrison was warning of the perils of Victoria and trigger-happier premiers instituting lockdowns. Next week, he's off to the Group of Seven meeting as an invited guest to rub shoulders with the leaders of the free world, though he's already taking flack for not having signed up Australia to emissions targets. The other big political story of the week was former Attorney General Christian Porter dropping his defamation case against the ABC. The federal government dumped one of the key planks of its signature superannuation reform following a raft of criticism from the industry and politicians. The bit dumped said the federal treasurer of the day would have the right to veto an investment decision of a super fund, including retrospectively. Good decision to drop that one. The OECD warned that the Australian economy was vulnerable to a large outbreak of coronavirus, denting its remarkable recent performance. As part of its global economic outlook, the OECD said it expected the local economy would grow by 5.1% this calendar year. Certainly the COVID-19 pandemic is the biggest uncertainty in the economics world. That was demonstrated amply this week by the breakout in Victoria and second week of lockdowns in Melbourne. It means limits on gatherings, leaving home, going to work and school and football games. Business is not happy. By the end of the week, the outlook was pretty good in Victoria, with the outbreak apparently contained, though on Friday, the state's chief health officer said a new variant of COVID-19 had been discovered. That's bad news. Helping the mood somewhat was the federal government's decision to fund, in conjunction with the states, a $500 a week payment for workers living in hotspots put off because of the lockdowns. Canberra had resisted any such payments earlier in the week, but eventually caved in. The corporate regulator wants to crack down on short sellers. The Australian Securities and Investments Commission said short sellers should make their announcements outside trading hours, stop using emotive language, and make sure reports are balanced and based on verifiable facts. There's been a few cases recently, WiseTech, Seek, Corporate Travel Management, where short sellers have released negative reports in a seeming effort to push share prices lower. They can then sell out and make their money. The chair of Tesla, Australian Robin Denholm, said the electric vehicle maker would soon be buying $1 billion in lithium, nickel and other critical and rare earth minerals from Australia each year. But the Australian government, miners and manufacturers need to step up to the plate, she said, and shift from exporting climate change to exporting climate solutions. Hear, hear. The corporate news was full of mergers and acquisitions this week. BetMakers made a $4 billion cash and scrip bid for Tabcorp 9 days ago, even though it's 1/10 the size of the gaming giant. That bid's rumbling along, and we're still waiting to hear from the Tabcorp board. Private equity group KKR, an online property player Domain, bid $3.1 billion for PEXA. The electronic conveyancing business, owned mostly by Link Group and Morgan Stanley, rejected the offer and said it will list later this month, valuing the group at around $3.3 billion. IOOF finally took control of MLC Wealth, the business it bought from National Australia Bank for $1.4 billion, 20 years after the bank purchased it for $4.5 billion. Woolworths launched its own standalone payments business, taking on the big banks. WPay is part of the retailer's efforts to diversify. It now has subsidiaries in media, data and logistics. Wesfarmers, owner of retailers including Bunnings, Kmart, Target and Officeworks, said turnover was still strong, though online sales growth had come off and there was more foot traffic in stores. The outlook was a little more problematic because of the lockdown in Victoria. It was a tough week for Newey, the data analysis company. It downgraded its earnings forecast for the second time in 2 months, triggering a slump in the share price. The drums are beating for management of that group, which listed late last year. Its share price peaked in January, but is now down 75% since then. It was a funny old week. There were lots of quirky stories around. There were reports in the US media that Caroline Kennedy, the remaining child of JFK and Jacqueline Onassis Kennedy, was set to become the US's ambassador to Australia. We love royalty down here, so getting a Kennedy would be a real coup. Then there was the one about China allowing couples to have a third child in a bid to boost the country's birth rate and lower the average age of the population. There were only 12 million babies born in China last year, the lowest since 1961. There's something very Handmaid's Tale about this yarn. Staying in China, President Xi Jinping has urged Chinese officials to create a more trustworthy, lovable and respectable image for the country. He wants China to make more friends. Seriously? How about not being such a bully boy for a start? In the US, Anheuser-Busch, maker of Budweiser, promised free beer for every adult American if the US can meet President Joe Biden's target of 70% vaccination by July 4. And finally, there was the story about wheel whackers. They're the tool being used by engineers keeping a watch over Qantas's A380s parked in the Californian desert. The aircraft have become comfortable homes for Mojave rattlesnakes and scorpions, and the wheel whackers are used to scare them away. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest story of the week was the economy and the share market, but I've already talked about that. Economic growth figures printed at 1.8% for the March quarter. The economy is pumping. Households are spending, businesses investing, governments are spending, interest rates are low. Keep this pace up and we'll be looking at a 2021 financial year growth rate of 9% or so. There is one little fly in the ointment, or maybe two. The labour market is still struggling. There's underemployment across the country. There's no wages growth. That needs to kick in before we can say the economy has fully recovered. Oh yes, there's also that pesky COVID virus and the slow pace of vaccinations. That could well and truly hijack things as well. The sleeper story of the week has been debated, loudly, for years, but just when it's going to impact every work in the country, it's gone quiet. The superannuation guarantee increases from 9.5% to 10% in less than 4 weeks' time. That's more money in workers' super account, but in most cases, less in their take-home pay. Federal Treasury this week said that about 80% of employees will be receiving less real wages next month. The most remarkable story of the week was house prices. Homes in every capital city, except Perth and Darwin, are now selling at record highs. Prices were up 2.3% last month, the second fastest pace since the late 1980s. Sydney homes are up 14% in just 4 months, according to CoreLogic. Did I mention that the two fastest rising suburbs in the country are in Sydney, and one is to the immediate south of my suburb and the other to the immediate north? Am I gloating? Too right I am. Mind you, there's probably good reason why my suburb didn't make it. Anyway, back to the story. That story is house prices are going crazy. My favourite story of the week was the one about movie chain in the United States, AMC. On Wednesday night, its share price almost doubled after the company promised free popcorn and special screenings to investors. It was a great example of meme stocks going crazy. Bulletin boards like Reddit push the stocks. There's been a flood of retail investors since the pandemic, and plenty of them read the bulletin boards. AMC is now 80% retail investors, and the free popcorn seems to have triggered the surge. It fell back, but it's my favourite story because of just how ridiculous things have become in retail investing land. Moving on to this week's interviews. The week started with an interview with Joe Fernandez from Australian Unity. We had a long chat about investing in the health economy as well as the general market. Joe oversees billions of dollars in funds and what he says matters. On Tuesday, I spoke to Yanir Yakutiel, founder and CEO of alternate lender Lumi. Yanir was very open about the business, who his customers are, how they're performing, and what Lumi charges. It's well worth a listen. Wednesday's chat was with Dr. Benjamin Curry, the founder of tech company Archistar. It's a great startup story, and anyone who's looking for a bit of inspiration should listen. Joe Masters, chief economist at EY, was my guest on Thursday morning. We chatted about the growth figures this week, and she's upbeat about the prognosis for the economy. Finally, on Friday, I spoke to Tim Fung, co-founder and CEO of Airtasker. It listed in March in one of the most exciting IPOs of the year, but like all good startups, it's come from humble beginnings. It's another chat worth listening to. That's it for the week in review. Tomorrow morning, we're chatting to AFL legend Paul Roos about team culture, what he's learnt from a lifetime in elite sport, and how it applies to the business world. I'm Sean Aylmer. Have a good Saturday and a great weekend.